Hello, everybody. This is John Blank, Zacks Chief Equity Strategist and Economist. And today is Monday, December the 4th, 2023. What I'm going to go through today in this video is finding winners. Always, of course, as investors and traders out there, you're looking for the winners. But what I can offer you is a top-down review of the major stocks in Zacks Consumer Discretionary Industries. All year long, people have been making a lot of money on certain stocks in the consumer discretionary industry space because they correctly understood that there was no recession, but what they probably understood better that we all need to understand is there was a definable and understandable rotation on fundamentals in the US economy that determined those winners. We can figure out by reviewing the major stocks in 4 or 5 of the consumer discretionary industries what is going on. This is a great discussion more broadly about what is going on within the US economy because discretionary spending, consumer discretionary spending, is holding the economy together. So, part one, we will go through a review of the major stocks, 10 major stocks, 4 industries, plus 6 more in an additional industry. And we'll talk about each of these industries and review the fundamentals of these stocks. Next thing we will have is the cash flow fundamentals. I'll go through some definitions to review. These are going to only support and reaffirm what we learned in part one. And then part three, we'll get through the capital expenditure, debt, current ratios, and all the other balance sheet metrics that will close up this discussion. By and large, we're going to get most of our real strong understanding of everything in part one, confirm it in part two, and get a little bit of insight from part three. So that's my plan today. It's about finding those winners. All right. So like I said, we're going to review the top stocks in Zacks Consumer Discretionary Industries, not necessarily outside of our company. So let's take a look at this. Over here, we've got home furnishing appliances. There are 10 of these groups. Some of these names you may not know. Will Scott Mobile is the biggest one with an $8 billion market cap. This is mobile shelters and solutions for offices and various things that are put up quickly, temporary shelters kind of thing. Whirlpool, of course, that's the appliance maker. Shark Ninja, I put up here, ticker SN. You may not know this name. It's based in Needham, Massachusetts, and it's a lifestyle solution through products for consumers. It's kind of like a super intelligent appliance company. You can think of all the robotic vacuum cleaners and things in your kitchen. Shark Ninja is a fascinating breakthrough in terms of using technology for appliances in the consumer space today. So this is going to be all of our players. As you can see, I put in red, this is over just the last month's rally from October through basically Thanksgiving. Some of these stocks moved up dramatically. So this is where the buying really took place. So let's take a look at it. Of course, Shark Ninja was one of them. Mohawk was the quote, the carpet maker, because this 80% basis point fall in the 10-year rate. A lot of the carpet makers that will be furnishing some more movement in the home building space and the home buying space are looking at Mohawk as a play right now. Master brand Lazy Boy and American Woodmark, all similar plays with super strong returns over the last month. Interface, you may not know. I put it down here, ticker Tile. This is the world's largest manufacturer of modular carpet. It markets under Interface and Floor brands. So Interface is not a name you know, but Tile, of course, is a great ticker for this company. That's what they do. Market cap's not too big, as you can see, 600 million. But again, over here, we've got some really strong indications that fall in the 10-year really boosted this industry more dramatically than all the others. Over here, we got a different story. We've got the leisure industry story. DraftKings, of course, people are betting and buying. You're going to see DraftKings over here, and over here you've got Sport Trader Group and the other consumer discretionary, which is kind of like a DraftKings. And they both, as you can see here with Sport Trader, up. Well, that was new allocation. Sport Trader 17 and DraftKings 46% return in 1 month. Just incredible. The other ones are cruises. Royal Caribbean and Carnival are in here. Roblox, of course, is a games provider. Again, all of this is showing you a type of leisure service that is booming and is likely to be Remember, these are buyers in November of 23. They're looking forward to 24. Over here, of course, media, we got Netflix, Comcast, and Disney. These are 200 billion, 170 billion market cap companies. Again, the big driver here is Rogers Communications Incorporated. This is actually Canadian, ticker RCI. You probably don't know this name. The $23 billion market cap company. This is, of course, partly tied to the US dollar movement, which you can also see here, though, with New Oriental Education. It's the private supplier of education in China. You might not realize there was a movement into some major non-US stocks as well that you may not know. On Holding, ticker ONON. I didn't know this name. Ticker ONON is a holding company, ultralight and stretchable fabrics and accessories. So I think it's kind of like a Lululemon type of thing. Again, very strong 23% gain. So you can see here, what I'm pointing out is getting into names in these industries really can give you a revelation about where 2024 might end up. Not 2023, 2024. All right, so revenue forward 12 months. I've got home furnishing appliance here, media here, leisure services over here, and other consumer discretionary down here. Of course, we want to talk about things that are growing revenues. I just want to point out Whirlpool's chart for what the appliance makers and Mohawk look like. So you can see in the pandemic itself, people really bought up these types of things and got their houses. They were locked in. They did a lot of work in their homes. Now, of course, they pulled a lot of that demand forward and they sunk down, but they may, as you can see with Mohawk, be turning. Leggett & Platt's basically a mattress supplier in Missouri. And then we got Lazy Boy. Again, you got this later humping with Lazy Boy in 2022, and then it came down. So basically, people started to put things into the Lazy Boy situation a little later. American Woodmark, this is cabinets. They're a large cabinet supplier. And again, you can see it peaking pretty much like you would think right when the vaccination started happening and people started moving around April 2022 or so. Over here, you've got DraftKings. Look at that. Revenue just climbing. Like I said, the underlying fundamentals of DraftKings are very clear here, as well as Marriott and Hilton. Notice here, particularly Hilton, you can see they just kept growing out of that pandemic, particularly from 2022 on, and they're now above their former highs, whereas here they're not. Very critical thing. Comcast, Disney, as you can see, holding up in big numbers here. Those are much bigger companies. Down here, of course, is just a grab bag of different things. But again, if you're looking for Onan, there it is. And you can see it was doing quite well, growing quite strongly. So this is how we pick up these names. Like I said, we're trying to find these big winners. All right, this is the COVID timeline for 2019 to 2023. Again, here's your home furnishing, your media, leisure services over here, and other down here. What we're looking for is these tickers like LVS, just incredible. And also over here, you can see the appliance makers and the carpet suppliers, how they humped up and then they came down. But is this over? We'll see. Comcast, interesting story here. You see the fiber optic build for Comcast really supported the company's growth. They turned it around fiber optics. So you may think about cable as an old school business. That's true, but there is growth there now. Take-Two is a video game supplier, again, doing quite well. And here's EDU. Of all the things you thought was over, this is a Chinese education supplier. So to no surprise, after they got out of the pandemic in 2023, EDU took off. So again, within the Chinese context, not a lot of activity. Then you got a story of the fundamentals doing quite well here, and people care about it and buy the stocks. All right, EPS F12M. This is perhaps the most compelling chart of the series. Bookmark this. It's a 20-year timeline. Here's the 08 crisis. More importantly, here's the COVID pandemic, short recessions, and you can see just how interesting all these earnings per share metrics are. There's your humping with Mohawk and Whirlpool. Netflix down and then up. Charter going well. Disney, just in Comcast down here a little lower. But Netflix clearly getting some traction. Over here, Pool, that's, backyard pools went big, crazy, just like Whirlpool, and now they're selling off, cooling off. Down here, of course, you've got some interesting stories to look at. There's your Onan. But most importantly, look at Marriott and Hilton. They're just killing it. This is the revenge travel, getting out of the house thing. It's impressive. Keep this in mind. You can see how it used to be products, now it's services and travel experiences. So for goods, experiences, goods, services. Keep that in mind. That's a trend that you'll see. Very lively trend that's supporting the markets now. Is very different than what was a few years ago. And by the way, these might be the buys because they may slowly turn around here. Right, forward PE valuations, I circled these. Charts aren't as helpful here as I thought they would be, but the PE valuations are helpful. So you can see over here, for example, home furnishing appliances, much lower PEs. Whirlpool's at a 7 PE, just incredibly low. Disney is at a 20. Hilton's at a 24. Marriott's at a 22. So people are paying up for those growth names that are currently hitting it. SRAD down here, and then I don't have Onan in this list for the valuations for whatever reason. But you do have BJ's Wholesale Club at 16, which is pretty strong. Keep in mind that there are names like Comcast at 10, which are also, that's the old line cable suppliers. So again, mainly you want to understand that industries create their own valuation metrics. All right, now we get into these 6 big names: Walmart, Amazon, Home Depot, Target, Lowe's, and Best Buy. Of course, Amazon is the tech mega cap. I put it in place here. Why? Because I want to show you what Amazon did most of all, and then, of course, reference it to the other 5 names. So, for example, revenue at Amazon's been super strong. Free cash flow actually collapsed, and then, of course, they did the layoffs and brought it back up. Over here, we've got earnings retention at 100% because they're a growing company. They don't pay out anything. They always retain earnings. Gross margins, probably the most interesting chart you can see here. Look at how the gross margins has been rising for 12 years with Amazon. Gross margins, not net margins, gross margins. And they have really built out a scale business here that you can see the scaling of the gross margin. Fascinating stuff here. Target's kind of having trouble, as you might imagine, stocks down. And over here, of course, Lowe's has been building with using the debt. So Lowe's kind of sticks out from the total debt to capital perspective. On to the next chart. So the same numbers. Here we got free cash flow, tangible book value, enterprise value to sales. Price to sales, really fascinating. Again, here is that Amazon story and them turning it around. These are, again, very interesting things. For example, the tangible book value per share for Target is much higher than Walmart, even though the stock's been down. Interesting stuff to look into. Amazon, of course, will be your reference for looking further into this. Again, you're going to have to get the charts for all of this stuff. Look into it yourself. All right, so these are the 6 big stocks. There is Amazon. So this is another way to look at the same thing all in one comprehensive pattern. So here you got a nice chart for Walmart, pretty much the best chart. Other ones, not so great. I mean, look at Best Buy. There's your humping in the pandemic, still hasn't turned around yet. Home Depot, same thing, a little bit less dramatic. Best Buy, same thing. So you get the humping thing, and only Amazon has turned it around. And that's basically Amazon Web Services and the AI pump that's going on here versus these other groups. So that's the other thing to keep in mind here. Amazon is not just a consumer discretionary shop. Lowe's, classic example how similar it is to Home Depot, just a little less spiky. Interesting stuff. All right, so we're on to cash flow fundamentals. These are going to only confirm what we've already learned, and we'll continue to learn about these companies. So, for example, cash flow, let's review its definitions. The net cash and cash equivalents transferred in and out of a company. Positive cash flows and maximizing long-term free cash flows, which we'll get into next, is the trick for creating shareholder value. So, fascinating. Look at Whirlpool, how it had cash flow through the wazoo, and now it collapsed. And as you can see here, Marriott and Hilton, like we talk about, are really doing quite well. So again, this is a fascinating thing. Comcast, you might have thought was over, and now it's back again. So again, nice reference point for understanding all these businesses. Free cash flow. This is the cash the company generates after cash outflows. This is cash left over after operating expenses and CapEx. We'll talk about CapEx separately, but also keeps operating expenses out. So again, this and free cash flow and cash flow are very useful charts. Electronic arts, look at that. That's a cash flow, free cash flow generator. Those are the games people. Comcast might surprise you again. They're actually quite strong. And again, Marriott and Hilton doing better now that the leisure businesses are moving. Return on invested capital is another way that makes average. It's the money a company makes that is above the average cost it pays for debt and equity. So this is how it does. It's how well it allocates its capital to profitable projects. And so ROICs on Hilton are 16, Pool 15, Netflix 12, surprisingly, American Woodmark. So what you want to be is you want to be in the top of this in terms of being a good company. All right, return on equity. Here's the net income over average shareholder equity. This is net income over total equity. Again, you mainly want to focus on these numbers, not the charts so much. They get kind of noisy here, but the numbers don't. So keep this in mind. It's a very helpful thing to look into. Earnings pureness, I'm going to skip. It's just a concept of how well the business performs directly as opposed to all the financial metrics. So balance sheet, this is the key one. Capital expenditure. Look at Comcast and Charter. They're both the cable groups. That's that build out of the fiber optic systems. Here's BJ's Wholesale. They're getting big and they're spending money to build it out. And then there's things like Whirlpool and Mohawk. Look at their humping. They're holding up, but not really expanding. So really worth picking up who's growing their business here and how. Depreciation and amortization, not so interesting to me. I just included it because it kind of fits in with CapEx. And then we get to total debt. Again, the issue here is just kind of looking at it within an industry, making sure you understand some of the differences. But the bigger thing here, not the reinvestment rate, but the current ratio. Current ratio is how well people can survive interest rate movements on their bonds and stuff like that. As you can see, it got very high for a while. Now it's kind of low after COVID. Keep this in mind. It's not a really important thing. The main thing, like I said, is that first and second area of this discussion. So that's it for me. I hope you enjoyed it. Please get the slides. This is about the slides and finding those winners. You can find big winners here and learn a lot of stuff you probably didn't know. So contact us at 866-794-6065. Email us at strategycalls@zackspro.com. Find us on the web at www.zackspro.com. That's it for me. I hope you enjoyed it. Once again, 866-794-6065.